let's go back and see if we can see if there's anything else that jumps out in here. Let's see, not that. Users of accounting information, you have external and internal users. This will be tested, so you need to double check. I mean, it's pretty straightforward. Anybody outside of the business, even though, I mean, it seems like board of directors is internal, but they're not involved in the day-to-day operations, so therefore they're usually an external user. Okay, everybody else that's outside. Internal users would be any of these, essentially leadership and managers of a company. They're the users of that information. Lots of opportunities in accounting. Let's see. Curious enough, I'm actually involved in this part of the world right now and doing data analytics and visualization of the data. So let's see. That's just key concepts. This definitely will be reviewed over time. Opportunity, pressure, and rationalization for the broad triangle. It's very easy to get away with things if there's not good internal controls. And even when there are, people find ways to circumvent them. Some of these general principles and assumptions will be tested as well. I'm not going to go through them because they're pretty dry and straightforward, but tricky. And I can't coach the non-tricky part out of it. It's just you have to understand some of these principles, especially like measurement, revenue recognition, expense recognition. Maybe just as a general rule, in accounting, you're always trying to match your revenues to your expenses so that whenever, because you don't want to report an expense, a revenue that has an associated expense and because of timing issues. So for example, let me show you an example here. They probably have one, but I'm going to show you here anyway. So like if I'm usually let's think about retail for a second. You know, you go into a store, you buy something for credit, right? So you buy a pair of shoes, buy shoes or sell shoes. You're a company and you sold some shoes. Let's say that they were nowadays are like $500 a piece, but let's do a little bit easier, $250 a piece. Okay, that's your revenue side, right? But when did you buy that pair of shoes? Any thoughts? No thoughts?
What was the question?
So I bought the pair of shoes on, no, I sold the pair of shoes, let's say on 1/10/2023. That's one transaction. I sold shoes and I got some revenue for it. Okay, I'm gonna put the account over here. When do you think I paid for, when, as a company, when did I pay for those shoes? When did they go into inventory? Any ideas?
Or the 10th?
Before the 10th. Yep, absolutely, JR. That's a great answer. Okay, so let's just say I'm really efficient. I'm super efficient. And I bought them on the 31st of 2022. Right? So I bought those shoes and they cost me $50. You know, I'm making some good margin on the shoes. Probably not, but anyway, so they went into inventory and eventually they go into cost of goods. Well, when I move it from inventory, let's see, if I do a little P&L, right, an income statement, let's just call this the expense for easy. if I do the income statement on 12/31, how much revenue am I going to have? It is
Probably zero, just because
zero
you haven't
revenue.
received anything.
Yeah, absolutely. And my expense on 12/31, because I bought the shoes, I'm just making this super simple, is 50, right? So my net income or loss is that minus that, -50, which really isn't true because I haven't lost anything. I bought an asset, right? It's sitting on my balance sheet right now. And in reality, if I did this the true accounting way, this is on the balance sheet right now, inventory. That's not quite. So this is zero. Okay, that's fine. Even on 1/10/2023, when I go to sell it, okay, I got 250. And let's say I recognize the $50 in the expense. And so I have $200 worth of income. But the problem is, have you ever bought something with a pair of shoes for $250 with cash? No. So usually a company gets that on credit. They don't really get the cash quite yet on 1/10. Maybe they get it on 1/11. So maybe they get the cash on 1/11. So they didn't get it here, but you sold it. It's no longer an asset. So you got zero there and maybe 250 here. So the attempt in accounting is to try to get these things to match up, to get your revenues and expenses to line up at the same time. So what they do, we go through a variety of gyrations or adjustments throughout either periods, day to day, month to month, quarter to quarter, where we're going to get this to line up. Because in the end, we want to accurately represent what the business income is. And the real income is net income is $200, not -50, not 250, right? And not zero, right? So this is the matching principle, revenue and expense, going back to here. And they kind of walk you through some of those things here, but that's the biggest issue largely within accounting. Okay, we'll stop there. Any questions on that? Assets, liabilities, here's your accounting equation. We already went through that. Notice how they have retained earnings as revenue plus expenses. We went over that. Common stock minus dividends. That's good. Any questions on any of this, the accounting equation? Okay. Communications. These are your main financial statements. I've gone on detail on these two. And like I said, these ones are generally just derivatives of other accounts that go in these other statements. They're just views, different views of how that information is flowing. Just walks you through how one impacts the other. Let's see, statement, balance sheet, and some more details on that. And lastly, your return on assets. This is one of the ratio analyses that you have to do. Pretty straightforward. Net income over average total assets. This average is your beginning plus your ending divided by 2. Sometimes you'll find in some of these problems that they'll give you the average and you'll accidentally try to average an average. And what you want to do is understand that sometimes they're either giving you beginning and ending balances and you have to average that, or they're just giving you the average balance. In this case, they're giving you a beginning and an ending balance. In this case, return on assets, the higher the number, the better. Lower the number, not so good. And they will test you on this right here. What is it? What is it trying to measure, right? And return on investment or return on assets is measuring, should be profitability. Profitability. There you go. Okay. Thoughts, questions? Okay. That is probably the, oh, there's always a good cheat sheet. A summary of all the information is all in this one sheet. This is kind of a handy guide, right? Go through this. This will give you just before a quiz or even during the quiz, especially the quiz access. You know, this is good information to have right next to you. Because remember, the only time that you can't have notes is during an exam. Other than that, you can use this information all you want. I encourage it. So make sure you have this on one side and your quiz on the other side. So if it asks you a question, what's business life? You can go, oh, it's indefinite, right? Or what is whatever? You've got it right here. What's a revenue, right? Kind of gave you this same answer, JR, as I kind of gave you. External stuff, sales, services, right? What's the accounting equation, right? It's right there. How do these things come together? Transactions, boom, 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 boom. See, you can see how they're doing the double entry on this. It impacts assets or oh, this is curious. I'll walk through this for just real quick because this will be important. You always hear about, balance sheet needs to be in balance. One side has to equal the same, the other side. And you see that in here when you come over here to assets, all these values equals the sum of all these values. But not all transactions hit the accounts, hit both sides of the equation, right? So this is the balance. This is the, what is it called? The fulcrum, or the point where they balance out. So if I have cash, right, an investment by owner, they put in $30,000 in cash and they have $30,000 in equity, yes, common stock. That matches both sides. But you have some things where I bought some supplies, so negative cash, and the supplies went into a positive to the supplies. So it stayed within the asset side of the balance sheet. So sometimes things will stay on one side of the balance sheet or the other, and sometimes it crosses both. Most of the time it crosses both. And as you walk through these, you'll see where they do. Like, assets is one thing, but like I used supplies, or I bought supplies on credit. That's probably what this one's I bought supplies on credit. This one I earned some revenue. So you got revenues on the equity side, and you have cash that came in. This one probably minus $1,000. I don't see what it's for. It's probably an expense. I paid for something. I paid for an expense. This one's probably the same thing. I paid for some sort of an expense. Yep. Right. This one, I sold something on account. So that's accounts receivable. This one, I received payment on that receivable. And this one's probably, oh, I paid an accounts payable. I paid an invoice. That was due. And this one is I paid out a dividend to one of the owners. Right. So you can actually see how they impact the different parts of the balance sheet and income statement. If you look over here on this side, revenues and expenses. Okay, so that's a quick summary of that. All right, I think I've bored you enough. How's that? Some of the highlights. So this cheat sheet will come in handy for sure.
Where'd you get that cheat sheet?
Well, this one's on page 20, yeah, but they're always usually at the end of the chapter, right? So I'm in chapter 1. And if you come down to chapter 1, yeah, comprehensive, it says summary cheat sheet. Okay. I'm sure if I go to chapter 12, it would be the same thing, right? I go to chapter 12, which is also going to be tested this week. I come down here, comprehensive. Ah, there we go, summary cheat sheet. Okay. So you can always come to these and get a quick glance at what you're supposed to know. I mean, really, this is what you're supposed to know when it comes right down to it. Cash flow is a little bit more difficult. Yeah, that's why I wish they would hold on to this for a little bit later instead of throwing it to you in this first week. But